Hey everyone, and welcome back to the show. I'm Blake Oliver, CPA, here today with Ray Ariano, CPA. Ray, how you doing?
I'm doing great, Blake. How are you doing today?
It's been a wild couple of weeks. I'm doing good, probably because I don't have any ERC clients, and
Yeah,
that's what we're here to talk about, right? The
right.
IRS put a moratorium on processing of the ERC applications. There's about 600,000 that are in this holding tank that are going to get probably really scrutinized and looked at. There's millions of filings that have already been done and paid out. And the IRS is saying now we're going to go and take a look at those too. It could be thousands and thousands of audits. Let's say that I'm a preparer. I'm a professional. I'm a tax preparer. I'm a CPA. I've got clients that are involved in ERC. Whether or not I prepared it myself, they probably have filed for it. Some have gotten it. Maybe some are in process. What do we need to know now that this IRS scrutiny has come down? What are you doing in your practice, Ray?
Um, well, I think it's a great topic to bring up, Blake. I think every professional needs to be aware of the downstream implications of ERC and what's going on. It's a credit against wages paid in a prior period. So we're talking about 2020 or 2021 is when you go to claim the credit, that's where it shows up. And the way the IRS has come down is they've said, you don't get to claim it in the year when you file your claim or receive your money. You have to go back and file an amended return for these prior periods. So this affects everybody. It affects tax preparers, it affects bookkeepers and accountants, and it affects auditors. It affects whether you're in public accounting or whether you're in the accounting department of a company that is or could be affected by ERC. So it's pervasive, and I think there's a lot of professionals out there going, "Oh, this doesn't apply to me." Think carefully because it could, and I think hopefully we can dig into some of these deeper points along our conversation here.
Yeah. Even if you didn't do any of these amended payroll filings, if you did the tax return, if you signed the tax return, now you've got to go back and amend, right? So
That's
all the
right.
tax preparers are impacted, whether or not they personally assisted with ERC. So why don't we start there? Let's start with the tax implications of all this.
Okay. So the first place to start there is as the preparer, you are governed by Circular 230, which says that you need to have a reasonable basis to put these numbers on the tax return and have your name at the bottom as the paid preparer. If you believe or you have reason to believe that the credit, that the claim is fraudulent or bogus, it ain't right, then you you're not supposed to, file that amended return. I mean, the return or the amended return if there's bad stuff on it. So the fact that if it was one of these ERC mills who's inherently conflicted, that right out of the gate gives you an extra hurdle to get over. How could this conflicted service provider be sure that they didn't
Mm.
inflate the amount of credit that's being claimed? Or the credit at all, that they're eligible for it at all. So so now you got to kind of poke around at the reason behind the credit and the accuracy of it and so on. And then once you get comfortable, now you can proceed with preparing the amended return for 2020 or 2021.
Okay, let me stop you there. How do I know whether or not this was a fraudulent claim? Like, what is my obligation as a preparer to
Right.
investigate this? Can I just say, like, I'm going to take my client at their word? Like, what do I actually have to do? Is there a standard for this?
Well, there's not a set standard. And I think every practitioner kind of has different levels of comfort that they try to get in preparing a return. My philosophy's always been I'm not doing anybody any favors by getting them a deduction for something that cannot be defended. So if you don't have good work papers or good documentation to support what you're trying to do, you're skating on thin ice. So, you know, let's get a copy of that 941X that was filed. Do they have work papers to back it up as to where did these numbers come from? How did you calculate these? The ERC claims that we filed, we've created a rather complex spreadsheet where we list out, basically dump out of the payroll system, you'll go by quarter, blah, 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 all the steps you got to do to get to your number. Let's look for something like that. Do they have this spreadsheet? And unfortunately, a lot of these ERC mills didn't provide like the backup work papers as to where this came from. Okay, then the practitioner, you just got to be kind of reasonable here and say, well, okay, look, we know there's only certain reasons why you could apply. Were you shut down by the government? If so, what were those dates? That's reasonably easy to find. The other one is a decline in gross receipts. So take the bookkeeping numbers, you do the quarter over quarter analysis, and you see, did they have that decrease in the qualify? If you can't come up with a basis according to the rules as to why they qualify, you got a bogus ERC claim, and you should, my opinion, should not file the amended return. And now you should be going into a different phase, which is explain to the client what's going on, the risk they have, and what are some of these new programs about self-reporting, bad claims.
Got it. So at a minimum, in your opinion, and this is what you're doing in your practice, is get the work paper. If there is no work papers to support these ERC calculations, then that's a big red flag right there. Look at the work paper and double check it, right? Check the calculations, check the numbers, make sure it's reasonable. I guess you don't have to have the work paper if there was like a shutdown, like, because there's different criteria for getting the claim, right? So it
Right.
depends on how they're making the claim. We
Right.
don't have to dig into that, but you're saying, like, when do you need the work paper, I guess, is my question.
Well, for the claims that we prepare, we create a very detailed work paper and explain everything in detail for every claim, right? We
Okay.
document everything.
Every
Um,
claim.
and you're hoping that other preparers of ERC claims of the 941X are doing the same. And again, that's what I come back to. If they're not, then you almost have to, I'm not going to say prepare the whole thing, recreate it, but you got to do enough, back of the envelope at least,
Yeah.
scratch something out to say, hey, why do I think this is okay?
And what's the worst case scenario? Let's say I don't do this. Let's say I skip this. Ray, I'm not as diligent as you are in your firm. What could happen to me as a preparer?
Well, I mean, if this happens enough, the IRS has your PTIN, your ERO, your identifying numbers that are registered with them. And there are situations where if the IRS sees a pattern among a preparer, they will go and audit. They'll select many more of your clients to audit with a similar fact pattern because they've found that as a preparer, you're not doing something correctly. And that's a really bad place to be. I can only imagine. I haven't.
Yeah, you don't want to. You don't want to go down that path.
No.
Okay, got it. You don't want to get on the shit list at the IRS.
That's right. That's right.
Fair enough. Okay, so work paper. What else from a tax standpoint should we be thinking about here?
So let's assume that it is okay, right? That you've gotten comfortable. Either you have a work paper or you did the back of the envelope and you go, yeah, it looks like they qualified and this seems like a reasonable number. Now, the next thing you got to do is you got to figure out, okay, what kind of taxpayer is it? Which form do they file? Are they a sole prop or a single member LLC? Well, that's a Schedule C on a 1040. That's going to be a 1040X. The other problem there is as soon as you file an amended return, they're manually processed and there's a higher risk of audit. I found a way higher audit rates on amended returns that I filed over the years than originally filed returns. So now you've opened up that entire 1040 to audit. Not much you can do once the cow's out the barn. I mean, you got to take this all the way to the end. That amended return needs to be filed. If it's a partnership or LLC, that's a 1065X. Okay, now we have the interesting one. If they're LLC or partnership, are they under the AAR rules, where all of the adjustments to tax are handled at the partnership level? They are not pushed through to an amended K1 to the partners. If they've opted out of that, well, now you got to push amended K1s to all the partners, and all those partners got to file amended 1040s.
And that could be a lot.
That could be a lot.
That could be hundreds, right? It could be, yeah.
Yep. Theoretically could be, right.
Yeah.
Well, I mean, not even theoretically, practicality it is. Then you get into S Corps, similar situation, right? The S Corp's going to push out an amended K1. There you go. That's going to push into an amended 1040 to those S Corp owners. Corporations themselves are going to file an amended return, C Corps, amended return. They pay tax at the corporate level, no big deal. And I asked an IRS person at one of these IRS forums about nonprofits. And because it's a publicly available document, they want that to be accurate and tie. They want amended 990s for nonprofits. So pretty much any taxpayer that's out there, that if you ran payroll and you filed and get an ERC claim, you need to push it through with an amended return for the year that it applies, 2020 or 2021. And that's going to trigger all kinds of other stuff.
So this sounds like a lot of work, Ray.
It's a lot of work.
How are you making sure that you get compensated for all this extra work you're doing? Do you have a set fee to do an amended return? How do you charge for it? Hourly?
Because a lot of this is so new, I hadn't thought through fixed fee pricing on this stuff. So for the most part, we're doing fixed fee on ERC claims, because when we were doing PPP and they changed the rules to allow ERC, you just can't double count the wages. Immediately I said, well, let's go run this analysis real quick and see what makes sense here to optimize the PPP forgiveness side. And so we kind of got a little jump on it on that side. And then once we knew if they qualified or not, I was able to kind of gauge what it was going to take to do the extra work. And we did a fixed fee pricing on the 941X. And then interestingly, the amended income tax returns, like we started out with a couple of partnerships. They were the first ones to go through, and that was a royal pain of amending a 1065 but not having it change the K1. And
how does that even work?
Well, they came out with this new form. It's kind of an in the weeds story, but they had this new form where you fill out this form and then you have to check a box in the software that says don't carry this to the face of the 1065, which is technically in conflict with another part that says this credit is to be claimed against the wages in the period that it applies to. So the IRS wants to see the salaries and wages number go down on the amended return, but AAR requires that it not go down, so you don't get a new K1. So there's this form in the middle where you check a box and say, hey, this is what's going on. This is what the wages were. This is what they should be, but it's not what it says on the face of the 1065X because of AAR. And then we're hoping that they're going to agree and figure that out. Because again, there's no history, there's no guidance here. It's not like we can say, oh, I've been doing it this way for years. Nobody knows what they're going to take.
All right. So what's next on the tax front? Or are we ready to talk about the accounting for it?
I think that's pretty much it about the amended returns. I think on the accounting side, you've run into an interesting situation because in our practice, we really like it when the GL, we're a zero house primarily, where it ties directly to either the audit report, if they're an entity that gets audited, US GAAP audit, independent CPA, or if it ties to a tax return. I don't like having to take the GL, export it to Excel, manipulate it, and then get it to tie to an audit or a tax return. You got to pick one or the other. So now all of a sudden you're making this prior period adjustment. And so what are you going to do? How are you going to keep your GL to tie over these back looking periods a year or 2 years ago, 3 years ago now in some cases? So it's a decision that everybody has to be aware of. You have to make. This is where I'm talking about the bookkeepers, and the accountants. Okay, how are we going to book this? What's going to happen here? And so you have to be very aware and very conscious and make a conscious decision of how we're going to handle this in the books so that everything reconciles and ties out easily.
So is it as simple as going back into these closed periods and making a journal entry at 12/31 and then reversing it on 1/1?
Well, this is where audit and tax world get have their different audits going to say, well, is it material? Right? They get to hide behind that. Tax, you do not get to hide behind materiality. So, yeah, in our case, for a lot of our clients that are not being audited, we're just going back into the prior period, making the adjustments, tying out to the amended return, and then you got to roll it forward as you
Hmm.
go. Oh, actually, interesting point back on some of the tax stuff real quickly. This gets very interesting when you talk about pass-through entities and capital accounts. So the accumulated adjustment account or the capital accounts, because remember on pass-throughs, all this net income is being pushed out and distributed to the owners, and this affects their capital account, which affects,
Mm.
down the road has tax implications. You want to be sure your capital account's accurate. This credit is gonna muck that up and make a little mess for you. You gotta
You got to
track it.
go back and adjust for it if you want the capital accounts to be right.
You got to, right.
Yeah.
Yep.
Okay. So, so extra adjusting entries for the tax preparers and the bookkeepers to fight over.
Yep.
Uh, yeah.
Right. And then we haven't even started with our triad yet, which is so then the bookkeepers, accountants, and the tax people, they all hash it out and figure out what they want to do. And then here comes skipping along the auditors.
Yeah. So how does this affect them? I mean, they're already overworked. They're overwhelmed. They got too much on their plates. Now we're handing them ERC to deal with.
Right, right. So, start with materiality. Is this going to be a prior period adjustment? I don't think anybody's going to want to restate the financial statements, but, here you go. Then you get on the point of, okay, it's a receivable. If did you get the money yet or not? Did you if you haven't got it, it's a receivable. Well, is that a good receivable or not? Okay, well, is it a valid claim or not? I mean, even if you got the cash and it's not a valid claim as an auditor, you want to know, is it a BS ERC claim from a mill, and they're going to get whipsawed
Uh,
back in 3 or 5 years under IRS audit.
and Ray, this might be a stupid question, but you gotta. I haven't made one of these entries, so remind me. Like, is this revenue? Is this income? The ERC money?
It's technically it's a reduction of an expense.
Reduction of expense. Okay, got it. Okay, and we're reducing the what expense are we reducing?
Salaries and wages.
Salaries and wages. Okay.
Yeah,
All right. I'm getting the picture.
it's
So
it's
so this is
it's a
going to be
mess for
weird.
everybody.
So because the audited financials are not going to get restated in most cases because it's not material.
Right.
So there's going to be this difference now. I guess there was always a difference between the tax and the
Yeah. Yeah.
gap, but it just adds to that.
It's going to be a footnote disclosure. What they'll probably do from a gap perspective is they'll probably just jam it through as an adjustment to retained earnings. They'll call it a prior period adjustment. They're not going to screw around with the prior years. They're going to debit, receivable, credit, retained earnings or, some account, which is where it would ultimately flow anyway if you went back in time, and then just kind of go forward. I think that the auditors, that's the easier part. I think the harder part is figuring out what to do with bogus ERC claims, because if there's all this extra focus on IRS audits, there's legislation about expanding the time they have to conduct these audits. They're pretty serious about this.
Yeah, so let's talk about that because this is giving me flashbacks to PPP. When all the scrutiny came down on PPP, a lot of companies and their advisors decided, maybe it's best that we don't try to take this money and maybe we give it back or maybe
Yeah.
we withdraw our application. Do you foresee a good number of ERC applicants giving the money back, withdrawing their applications?
I think definitely withdrawing their applications. I think we're going to see a lot of that. That's that 600 and some odd thousand that are in the hopper right now.
And to be clear, I think the IRS has said they're going to have a process for this.
Yes,
I haven't seen anything yet as we record this
that's right.
on September 27th. I haven't seen
Right,
anything about it, but they say there's
right.
going to be one.
I was in a continuing ed session last Friday where the IRS national liaison was there, and he confirmed that the program has not come out yet, but they are working diligently on it, and he expected it out within a couple weeks or so.
Okay.
So, yeah,
And then there's the other matter, which is a little harder, which is giving the money back.
right,
Because that's also going to be some sort of program. Is the
right.
IRS will have some sort of I don't know, what do you call that kind of program? It's like a forgiveness, reverse
Yeah,
forgiveness,
yeah,
or
it's
safe.
if
It's not a safe harbor. What do you call that kind of thing? It's like when you remember when you had like a foreign bank account, and every now and then you can like plead for mercy.
right. Oh, I
Uh,
know. I remember I can't think of
I
that word
forget the
off the top
word
of my
right now.
head.
We'll think of it. We'll
Right, we'll
think of
think
it.
of it. This is a
Yeah,
common thing where they give you a time period to come clean, and they're not
yeah.
going to hit you so hard with penalties and stuff like that. And one of the things that's being talked about here is
Amnesty.
amnesty. There, exactly. Great,
Yeah.
great. Is that if you self-report that okay, you tell them they don't have to find you, that there's going to be some kind of break on the penalties. They can't do much about interest because it's time value of money and the money was where it was. But there's discussion about being able to exclude the fee that you paid to the ERC mill, because if you can show that you paid that, right? So $100,000 credit, the fee was $30,000. You received 70. Show that you can document all that, and they're only going to look to you for the 70. Again, this has not been written out or documented yet. This is all speculative, but I think that's incredibly generous of the IRS to do that, because technically they don't have to do that.
Well, I'm a little more cynical, Ray, and I think they're doing it because they know they don't have a chance in hell of actually auditing the millions of ERC claims that have been filed so far. So far, according to the IRS announcement that came out with the moratorium, 252 claims have
Oh
been
yeah,
referred for criminal prosecution. Only 252.
yeah, yeah.
No, 252 are under investigation, and
Right.
only 15 have
Yeah,
resulted in prosecutions.
yeah.
And they said thousands are under audit, but
Right,
we're talking thousands, in the low thousands out of millions.
right.
So realistically, what are the odds that a specific one claim of your one client are going to get audited? I really wish I guess it depends on how sophisticated the IRS is in picking which ones to
Yeah,
audit.
they're gonna. My feeling is they're gonna do big data analysis. They're gonna test. They're gonna gather information on these first couple of waves of what they're auditing. They're gonna look for patterns, and then they're gonna
They're going to
go
put them all
after it.
into ChatGPT and ask OpenAI to tell them which
Right.
ones to audit. That
Which,
might be their best bet, hononestly.
which are the higher risk ones?
Yeah, yeah.
Absolutely. There you go.
Well, but they got to
It,
get around that 10 megabyte attachment limit.
yeah, it's going to be a huge
It's
database of
truly,
issues.
truly big data. Truly big data.
Right.
Yeah. Hopefully
Um,
not on the mainframes. I think they have that on some other more advanced system.
right, the old VAX machines.
Yeah.
Yeah, but it's a big issue. It needs to be addressed. I really hope that they can, and that they can set some examples here to say, hey, come down on people pretty hard and say, don't do this.
Yeah.
It's a bad thing. And then if you can make this amnesty program palatable, hopefully more people will self-report. And this is where the legit practitioners who are filing those amended returns can help give the feedback to people. They might not even realize
Oh yeah, they probably have
that
no
it's
clue.
bogus,
Yeah.
right?
I mean, we got these phone calls,
Right.
David, my co-host, got a phone call from Snoop Dogg that we played on a recent episode of the accounting podcast, and it had to have been a deep fake, and that was an ERC mill there, and that got his attention. And how many business owners were taken in by those phone calls, promises of
Right.
free money,
Right. So I'm
So
glad it's getting attention. It really needs to. Hopefully we can get this cleaned up a little bit. But it's a big issue, I think, for the entire profession, as we talked about, from tax preparers to bookkeepers and accountants to auditors, public accounting, private industry. It's all over the place. It's still a valid program, by the way.
right,
And
the
so
moratorium doesn't mean it's been shut down.
that's right. It's legislation, right? They'd have to
Yeah.
pass a new law to say, no, this doesn't work anymore. And so if you have a legitimately valid claim, you're still allowed to file. They've never said you can't file a new claim. You're just going in knowing that you have a higher level of scrutiny to pass. That's all.
Right. And they're not going to look at it until 2024, and it could take
That's right.
180 days.
That's right.
So yeah, they're
Right.
they're very discouraged. They're trying to discourage us. It seems like that's how it.
Right.
Yeah.
Right. I think in fairness, they're trying to discourage us to the point of saying, look, if it's not legit, don't even try.
Yeah.
And that's
Which
that's
is
a
what
good
it should
thing.
be, honestly. Yeah.
That's right.
Well,
That's right.
Ray, thank you so much for coming on the show and clarifying these questions for our listeners. If they want to follow you online, what's the best place for them to do that?
LinkedIn. I use my full name, so Reynaldo Adriano, CPA. I think I even threw the PFS CGMA on my thing. I got to clean that up. But right now it's my full name, Reynaldo, last name Arellano on LinkedIn.
Follow Ray on LinkedIn. You can see him stream live occasionally and talking about all sorts of really fascinating topics. So definitely be sure to follow Ray. Thanks, Ray, for all your expertise.
Thank you, Blake. Thanks for the opportunity. And thank you for everything you're doing for our profession. We really appreciate it.